This is United for Biodiversity, the Alliance podcast, a platform that unites global voices in a call to action to protect our planet's rich biodiversity. Join us for critical insights and let's stand united for biodiversity.
Welcome to this week's episode of United for Biodiversity, the Alliance podcast. I am your host, Kiana Wilberg. Over the past few weeks, we have discussed a range of important topics that are critical to the conversation of protecting the world's biodiversity. Today, we zero in on a very important aspect of this entire discussion, and that pertains to financing. To help us with today's discussion is a very important guest, Ms. Marianna Lara Otaola of the Global Green Growth Institute. She is the lead on climate finance at their Mexico office. Ms. Lana, welcome to the podcast. Thank you for being here.
Thank you, Kiana. Thank you very much for having us here. Thank you.
So, before I dive into my substantive questions, tell us a bit about the work of the Global Green Growth Institute, because as I noted, financing is a very important part of this discussion.
So Triple GI or GGGI, we are an international organization. We have almost 50 member states across the world, and
Wow.
basically, yes, we are growing. We are quite young as an organization. We are 12 years old, and basically, our mandate is promote a green growth, less carbon resilient and inclusive. So we provide technical assistance to governments mainly, but also we work with private sector towards these green growth facilities and so on. So basically, in the region, in Latin America and the Caribbean, sustainable finance has been an important area of work. Basically, it's one of our competitive advantages. Well, not only in the region, but worldwide, but we are talking here in this part of the world. And basically, GGGI's 2030 strategy emphasizes on catalyzing and accelerating access to climate finance for our member states. And the way we do it is we have three main work areas. One is creating enabling conditions, which is basically regulatory frameworks, policies, market mechanisms, and so on. Also, we work the second stream is financial instruments, such as green and social bonds, to direct capital towards responsible initiatives. And at least in LAC, for the past, I think since 2017, we have mobilized over 1 billion, no, over 8 billion US dollars. So
Wow.
that's has been exactly. And then the third work stream that we have we worked on is transparency and accountability of those financial, those resources that have been mobilized. And we worked, of course, aligned to the enhanced transparency framework and so on. So basically, that's what we do.
Wow, that is amazing work. So, thank you for the work that your organization is doing. That's really impressive. Now, as you noted, you've worked with GGGI, and that has allowed you to engage with governments for varying countries. Is there any particular project or country success story that shows you what's possible when green finance really works?
Wow. Well, we have a lot of examples, so
Hmm.
that's a good news. But I would say, at least in this part of the world, in LAC, basically we have worked in these green bonds and sustainable bonds and so on in Peru, in Mexico, in Ecuador, which have mobilized a lot and of billions towards different green initiatives that entail resilience, conservation, and so on. So I wouldn't just showcase one, but we have a range, and I would mainly say that it's in this region that a lot of financial instruments, innovative in the world and in the region, are happening, like debt for nature swaps and so on. So yes.
So, green and blue bonds are gaining traction as tools for sustainable financing. Break down for our audience What are green and blue bonds? And can you also share with us what makes these instruments so impactful in accelerating climate and ocean positive investments?
Yes. So bonds that have these specific tag, green or blue, the resources that are obtained are have to be allocated or blue investments. So different to plain vanilla bonds that you go to the market, you raise some money, you have that issuance, and you can work it, allocate those resources for whatever the government or a company wants to do. In the case of these tag bonds, it's for specific purposes, for eligible criterias that have important impact on climate change. So in the case of green and blue bonds, um, well, there are a lot of opportunities and advantages, and that's why in the region it's growing. Well, not in the region, in worldwide, honestly. So one of the options is that it offers long-term viability. So sometimes, as a government or company or whatever, you want, of course, long-term maturity. Also, it facilitates transitions. Usually we come from a really carbonized economies, and we want to go to decarbonize, low carbon, and so on. So you have specific instruments that help you in that sense, with by including indicators, KPIs, and so that's another option. Also, green and blue bonds mitigate risk. Sometimes investors are more cautious about lending to climate vulnerable nations or to these specific initiatives. So in the case of developing these bonds, you establish specific mechanisms of how the resources are going to be raised, managed, allocated, and that transparency in showing how those funds are going to be managed provide certainty and mitigate risks. Also, in terms of for governments, and that's why it's also has increased these green blue bond market, is that they are unable to diversify their investor base. So of course, if you have more investors, you somehow also diversify your risk, and so that's also an option. And well, also, and that's one of the most attractive things, is that when you have these green and blue bonds, usually investors pay for a premium. So, or well, we call it greenium. So then the yields are better in term as per compare as plain vanilla bonds. So those are some of the advantages of having these issuances.
Thank you so much. Now, I want to discuss another important tool that we've been hearing about, and that's debt for nature swaps. Now, these have reemerged as a promising solution for heavily indebted countries with rich natural assets. But how can these particular arrangements be structured to ensure long term conservation outcomes and local benefits?
Okay, so yes, they are growing. For instance, as Triple GI, we supported the government of Ecuador in two. So one last year, it was recently, and it was huge. It was a 1 billion liability management. So basically, these are for nature swaps. First is to understand that it's a liability management operation. So, but the difference, as traditional liability management operation, is that when doing uh, these debt nature swaps, you first nearly clear define conservation targets and time on performance. So that's really, really important. And also, you have to have robust monitoring and evaluation frameworks for periodic reporting of these schedules of these management of resources, and also have an independent verification of protocols and so on to ensure transparency. So having these three components entails a lot of commitment from governments at the highest level. So that's important. Usually you build an interministerial committee that involves all relevant ministries to oversee the structuring of the operation and to monitor the implementation of the sustainability KPIs and so on. So that's an important key objective and pillar that we would say. And then also another key pillar for having these debt for nature swaps is to have those funds that you obtain somehow ring fenced, and that entails having a trust fund. And this trust fund, should of course be aligned to best international practices. So that's really important. And usually you create this conservation trust fund, and is the governance mechanism that manages the proceeds generated by this liability management. So basically, I would say, yeah, those are like the conditions that you have to have, and that's different from a normal liability operation in the markets.
Thanks for that. Now, I noted that you mentioned a few factors that governments and financial institutions ought to get right. It seems to, in order to ensure that debt for nature swaps truly make sense. But are there any other pitfalls that governments or financial institutions should be wary of to ensure that these debt for nature swaps they are as financially viable and still environmentally effective?
Yes, I think it's key when identifying, it's not just about raising money in the markets, or,
Mm-hmm.
giving some management to already a debt that you already have. So, yeah, that's like the easy bit. I'm just saying, it's not easy, but, but
Yes.
it's important to really provide certainty to investors, these new investors, where resources, use of proceeds are going. So, in terms, the government have to really have established commitments at the highest levels, aligned to, I don't know, adaptation plans, NDCs, and so on. And so that, for instance, if you're raising $400 million, whatever, that they go to these natural protected areas, or you really say what's, for where the money is going, and what's the impact in terms of conservation, for instance. So that's really important work that has to be done, and it's where the environmental sector joins the financial sector.
Thank you so much, Ms. Lana. To wrap up today's discussion, I want to talk a little bit about Guyana, which has often been lauded for its green leadership, and it's now stepping into a new chapter, adopting the global biodiversity fight. And I want to get your take on how crucial this chapter is in today's global climate dialogue.
Yeah, I think Guyana, as well as a lot of countries in the Latin American Caribbean region, is one of the richest in terms of biodiversity. That's very important to say. And so, having that commitment entails that all of us, and in this case, Guyana, is okay committed to protect this biodiversity. And so that's something that I applaud from the government, and it's important, to follow up on that. And but of course, biodiversity requires money. Well, everything requires money. So I think that Guyana, as being a lead in green initiatives and green finance too, it's a call for starting to use these instruments like green bonds, blue bonds, for exactly financing a specific climate related targets. That means in adaptation, in biodiversity, in conservation, and I think Guyana has an array of options in that sense.
Thank you so much,
You
Ms.
have loads of forest. You're mainly a forest, as well. I have never
Yes.
been to your beautiful country, but it's forest. So yeah.
Thank you so much, Ms. Lana. I think you have really energized our podcast today with very thought provoking insights. So, thank you for breaking down a number of the financial instruments and sharing with us the important work being done by Triple GI.
Thank you, Kiana, and thank you for having us here. Thank you.
To our audience, I want to thank you as well for joining us. Be sure to follow us on our respective social media handles as we continue to bring you more insights regarding the importance of fighting the biodiversity loss and addressing this crisis. And Guyana is stepping to the forefront where this is concerned. I'm Kiana Wilberg, and I'll see you next time.
Thank you for listening to United for Biodiversity, the Alliance podcast. Be sure to follow us for more insightful episodes on our Spotify, LinkedIn, and Facebook accounts.